Hello, everyone, and welcome to a special May 4th episode. May the 4th be with you for 2023 of Investing with IBD podcast. It's Justin Nielsen, your host, trying to look as much like Luke Skywalker, the old Luke Skywalker, of course, as much as possible. And joining me, as always, is Arusha Paris. He's a portfolio manager and Padawan over at O'Neill Global Advisors. How are you doing, Arusha?
May the fourth be with you, Justin.
And of course, we have Ed Carson because who better to celebrate the day with than a lover and hater of Star Wars, depending on which trilogy you're talking about. Ed Carson, of course, is the IBD news editor. How you doing, Ed?
I'm doing fine. I can't believe 43 years since the last really good Star Wars movie. We're still talking about Star Wars. Here we are.
So yes, controversial as always. Starting out right out of the gate. That's we're going to try and keep it together on this show because I can already see we're losing Arusha.
This is why he's on.
Yes, this is why he's on. So
Oh
we're going to
my
start
gosh.
out with a little bit of what's going on in the market. Of course, today was a Fed day. The evil empire or not, we'll see. And we're going to talk about some of the lessons we can learn from the Star Wars trilogies, for good or for worse, and using the Force. And then Ed is going to wrap it up with a few stocks that are on his radar. So, Ed, I guess maybe we start out with kind of a general market overview, and then we can dive into the Fed. So, do you want to start with the Nasdaq?
Yeah, the NASDAQ, I mean, if you look at the indexes, the major indexes, they look okay. I mean, sure, they're hitting some resistance at the highs, and you'd like to see them punch higher. But still, overall, we're seeing, it's still trending higher, finding support. It dropped a little below the 21-day line today, but that's okay. I think the concern is that underneath the indexes, there's not a lot of breadth. We've seen that from a lot of different measures, whether you look at equal weight indexes, you look at advanced decline line, and buying opportunities have been difficult. I mean, to be honest, I mean, and here, yeah, here's you punched up, like there was RSP, which is equal weight. Here's the advanced decline line or the new highs versus new lows. New lows still way outpacing new highs, and that's a little sort of odd, really, when you think about the market being close to 2023 highs. You'd almost think you would just have a bias towards the new highs just because of that. But we're not seeing that. So that's shows you how weighted we've been to the mega caps. And it's just been tricky. And even when there are buying opportunities, it's often when a stock gaps up 20%. Then what do? I mean,
Right.
do you buy it or do you let it go? So it's an uneven market. It's a market rally under pressure. And I think you have to treat it like that. You can't treat it like it's 2020. You can't even really treat it like a normal market rally, steady market rally. It's not January. It's certainly not 2020. I think investors need to be fairly cautious.
So when you recognize that type of environment, how do you take that and put that into action? Are you just playing with a lot smaller positions, just reducing the amount of exposure and just kind of having maybe 50% exposure to as the kind of the max versus 100% in a great bull market?
Yeah, I mean, I've been starting smaller and just never really gotten after February. I scaled back and really haven't gotten too much in. I mean, not saying I haven't done this or that, but it's partly because, I mean, some people are really good at getting out, or taking partial profits and getting out. I'm not as good at that. I don't like doing that. I'd like to let things ride for a little while for the midterm. And since that's clearly not the market where this is, I mean, yes, there are stocks that have gone up and you could hold them because they've
Yeah.
kept going up. But generally, you have a lot of stocks that either peter out right away or go up for a few weeks and then round trip, like an AMD or other things out there. AMD would sort of round trip before today's move. So, that was, there's things like that. So, that's not an environment that I really appreciate. And it's not, and so I've tried to keep my exposures low because it's not really an area where I don't really feel like I have an edge right now in this
Mhm.
market. And so I'm just trying to just hover at the edge of it, stay engaged. I know there's a lot of stocks near buy points. Wouldn't take much for this to turn around, but that's how I'm handling this market.
Yeah.
And just very quickly, do you like to hold some of your positions 43 years, kind of like Star Wars?
Yeah, I'm gonna hold out. I'm gonna hold out for a better night. Nice. Like, okay. I mean, I've held things. I normally I'm sort of like in the midterm. I like to hold it for several months. Not something that like holds through years and years. I mean, maybe in 2020, I think I held Nvidia for like I don't know 8 months, one point, something like that. And
Mhm.
didn't get all of it, whatever. But it was, obviously it was easy to hold things then. I mean, it's like everything kept going up,
Yeah.
and if your stock went down that day, well, another stock went up, so your portfolio was fine. So pretty easy when things are riding the 10 or 21 day lines, that's going vertical. So yeah, so I think that's sort of my style to do that. And sometimes I can try to bounce in and out, but sometimes I just feel a little bit frantic. I feel like I'm multitasking and I just don't feel comfortable in that
Hmm.
environment. And I know that's something I should work on, but I also want to know myself.
Hmm. Well, and it certainly seems like, again, the tighter your grip, the more the star systems will fall through your fingers, type
That's
thing. It's, you know, I mean, you just mentioned a number of stocks, and I mean, like ALGM, I mean, anything that seems like it was doing well, it just doesn't seem to last. And so if you're trying to hold on to these things for too long, it's you wear out your welcome. It seems like very easily. And then of course you have the things like SMCI, where if you're trying to apply any type of risk management rules, you're you're getting out kind of at the lows, unfortunately. And then you have an earnings report like today, and it's up 28%, but you can't get any cushion going into some of these earnings reports because of the well, and I mean SMCI. This is, I think, true of a lot of stocks that we're seeing out there. It's almost like the only their moves are happening on earnings, and then they don't go anywhere for the
Yeah.
rest of the time. The rest of the time is consolidating, and by the time the next earnings report happens, you're actually below where you were at the last earnings report, and then you jump higher, and it's a weird leapfrogging event that's
Yeah,
happening in some of these.
for this stock that has run up so much, every time it breaks out, it goes well underneath that old
Hmm.
high.
Yeah.
I mean, maybe there was an early entry. I mean, this is a weekly chart, but it's like, but still, generally, and we've seen this with another one. This isn't a stair stepper. This is like a giant jump and a giant drop. It's just like
Yeah.
that's just, I mean, and when now and in general in the sideways market, I think that just makes it really difficult. 'Cause you end up buying a little bit on strength and then you sell on weakness, and that's you. There's just not, how are you not going to get churned out? It's hard not to get knocked out or say I'm going to let it ride, and then you risk really big losses, especially with earnings season. Uh, so there's all of that situation. I actually was thinking of all the earnings. Some of the earnings, okay, the big misses we've had, that's just been so treacherous. I mean, they've been enormous, but some, okay, they've been guidance. Okay, your Mobilize or your Impinj.
Hmm.
I really, or even AMD, which had weak guidance. One thing that really struck me was Arista Networks.
Mhm.
Arista Networks, okay, it's strong earnings. It wasn't a blowout report. I don't want to go too crazy and blah, okay. But then today, then it also it raised guidance a little bit for the next quarter. So it didn't even cut guidance. It just didn't raise guidance for the back of the quarter. And it's like, this is the blow. I mean, it's like, this wasn't like a 200 PE stock that suddenly was disappointing. It had already pulled back. Just shows you how this market is so treacherous. And this has basically fallen 18% or so when you combine the 2 days or something. That's a huge drop. I mean, that happens, but
Yeah.
that should just show you, wow, this market is not showing any forgiveness
Hmm.
for anything. I mean, it's just like this is not January when a lot of stocks would report and they might guide low and the stock still rallied a lot,
Yeah.
kind of thing. This is not that environment. And uh, I was looking at, there's a whole bunch of stocks, you know, last night that were setting up ahead of earnings, and we'll see. Some of them will break out, and some of them will break down probably, and it's a real difficult environment to
Hmm.
be in.
Yeah, it seems like we're just slowly losing more and more, right? Of the ones like an Arista Network or an ALGM that were trying to lead us out of this. And so really, I guess the bigger question then is who's left to lead if you're not large cap tech?
Yeah, I mean, obviously there's the building materials and home builders that are
Yeah,
doing well,
right,
but a lot of
right.
them are already gone now. I mean, not all of them,
Yep.
but a lot of them are gone now, which, so if you've got them, great. There's medicals, a lot of them, and there's medical products, there's drug makers, some large biotechs. Those are doing well. Some restaurants, but not all restaurants. I mean, it's
Yeah.
like a menu. It's like there's some items you avoid. That's for sure. I mean, it's just like I
Like
mean,
going to a restaurant where you've got a major food allergy.
yeah, mood allergy. It's like, hey, this one has a C. Watch out. There's like this chef doesn't wash his hands. So which chef are you getting the meal from? I mean, it's we had huge numbers. Like Wingstop was all over the place today. I think it had solid gain ultimately, but Starbucks was one of the biggest losers on the S&P. So, and I don't know exactly what was wrong with it, but I thought it had pretty decent numbers, but I really didn't look and see what
Well,
the
they
guidance
didn't.
was.
Yeah, from what I
They
understand,
didn't
they just
raise.
yeah, exactly. They
Real,
affirmed it,
which I
didn't
guess is
raise.
not great given that they beat, they should be, but nonetheless, that
Yeah,
is a
and then
huge
China
drop.
too, right? I think that was the other thing is China's going to grow at a moderate pace,
Oh, okay, but
which
it
is
rebounded
in
really
many
good.
ways Starbucks is a China play, right? So so I did that. That was probably the other thing that just kind of brought a little bit more concern, especially after such a big run right up into new highs
But
or
that shows you the
52 week
difficulty of
highs.
this thing. It's just like, well, which one do
Yeah,
you, I mean, it's like, and there's all go, well, no, Wingstop is better. And I get that. I mean, I like, but it's just whoosh, those are a couple of big differences in your moves, and so, those were both in buy zones. One went up 9%, one went down 9%,
yeah.
Yeah, yeah.
uh,
And again, it just seems like there's a lot. I know that there's a lot that don't move like this. The ones that move are the ones that stick out, but it seems like there's not as much in between. It's either
oh,
one or the other. Like you're either up big or down big. And again, how do you roll the dice ahead of a earnings report like that? So let's take a kind of step back though. What's the overall catalyst of what is making things so difficult? I mean, for a while there, we were blaming it on the Fed and the tightening cycle. I mean, this has been one of the biggest jumps in tightening. 5 percentage points basically, and in such a short period of time. Is that still what's hampering stocks, or is it more the inflation story, the recession story of what's to come? We've had the yield curve inverted for it seems like for forever now. What's kind of the thing that's holding the market back so much? So I guess we can figure out what we need to change in order for the market to get back to a market that we like.
I mean, yeah, there's a lot going on, obviously. I mean, earnings, there's a lot of weak earnings are coming. A lot of the stocks that we're looking at, the home builders, even a lot of the chip makers, their earnings aren't looking good this year. I mean, some, and so but that's the way the market is. The economy is slowing, inflation's out there, so that's an issue with a lot of those names. The Fed is trying to fight inflation without getting into a recession. So, like, people are saying, "Oh, the Fed will cut rates later this year." Well, the market is betting on that because they sort of figure the economy will go into recession. That's not good.
Hmm.
So it's just narrow window that trying to get a soft landing when you have to bring inflation down as high as it got. It's just really difficult. It's a blunt tool, and it's one of those things where it doesn't
Right.
really show up into the economy for months later. And like you got the bank crisis that's coming in
Right.
part because of those Fed rate hikes. So it's a narrow path. Where are you going to get that modest growth, modest to solid growth, modest inflation, where growth stocks can outperform a rising economy? And you can see that there's news hitting right now up there at the top there on banks, and it's just hard to know how that's going to go. We know that the banks are going to price curb lending quite a bit, but we don't know how much and when that's going to hit. And so a lot of things that are, the market tries to price ahead, but it's really hard to know what the economy is going to be like, in a few weeks from now, let alone, 6 months from now.
Hmm. And as you said, I mean, there really is kind of this. Um, n- I mean, they were talking for a while about this window of kind of not overdoing it, but not causing the hard landing. And what do you think the chances of, uh, shooting this torpedo in a 2 meter hole?
Yeah, it's
Trust your feelings, Ed.
trust your feelings. Yeah, I don't know. I'm feeling a little nervous here. I mean, look, a mild recession may be something we have to get, but it's just such a weird situation because the jobs just won't come down. So it's
Yeah.
like this hot and cold economy where we might have some, manufacturing is weakening. You've got to figure commercial or real estate is just dead. Housing somehow is doing okay or coming back a little bit in the actual housing, not the housing stocks.
Hmm.
Consumer spending is still solid. Jobs are great. So it's really weird how that's all going to work. I don't have any insight really, and even if I did, it wouldn't matter because the markets are going to do what it's going to do. It seems like maybe a shallow recession seems likely later this year. That's sort of what even Fed Chief Powell was sort of saying. Yeah, that's what the staff thinks. They still think that.
Hmm.
But maybe once we get into that point, that's when the market will rally after we've entered it. But it's hard. The markets usually don't rally into a recession.
Right.
Maybe
Yeah.
this one's different because this one's unusual. But usually you rally after you come out of it. Thinking about in 1990 or 2009, we started rallying uh, just as the end of the middle or late of the recession, not
Mhm.
not at the
Not
beginning
going
of it.
into it. Yeah. Very, very good point. So when we come back, we're going to talk a little bit more about the lessons from Star Wars and using the Force with this market, and all markets really. So stay tuned. We'll be right back.
The Direction Hydrogen ETF offers exposure to the top 30 pure play hydrogen economy companies by largest market capitalization, leading the way towards net zero emissions by providing more accessible, efficient, sustainable solutions across 5 hydrogen related subthemes. With clean hydrogen based energy expected to grow 5 times in the next 30 years, companies building hydrogen related businesses to generate power, heating, transportation, and more will likely thrive.
Welcome back to our May 4th episode of Investing with IBD podcast. It's Justin Nielsen here, your host, and Arusha Pires, who joins me every week. He's a O'Neill portfolio manager over at O'Neill Global Advisors. And of course, our special guest this week is Ed Carson, IBD news editor. And gosh, yeah, at this point, I think you deserve the title of Jedi Master because you've been at
Yeah.
Investors Business Daily so long, member of the Quarter Century Club. Um, I
Yeah,
would
Or you
think.
could be
I
Uncle
hope I'm not a
Owen too.
Polywan still. Boy,
Yeah.
that would be a bad sign.
Right. But let's go ahead and start this discussion with kind of some of the tenets of using the force and see what we can learn about the market. Is there something that you think is the most important? I mean, one of the things we were talking about with just the overall structure of the movies was go into it having a plan.
Mhm.
We certainly say that about the market, having your exit plan, having your plan for what you're trying to accomplish and what you're looking for, a strategy and all that. Um, Arguably, the last trilogy didn't have so much of that plan, but what's your take on that?
It'd be hard to argue that they have a plan. Yeah, I agree. It's like that's something that having a plan is so important. It's just like as bad as The Last Jedi was. And then when I came on a year ago, I was all about talking about how The Last Jedi is terrible. And it is. I want to make clear about that. But Rise of Skywalker was even worse. And the whole trilogy, it was just there was no clear because they had no idea. The Last Jedi didn't really follow the prior movie, and then the Rise of Jedi. They both seem to be apologies for the prior movies. And if you're reacting to it, you need to be thinking, well, okay, I want to be my plan is I'll be buying here, and I'll be if this happens, I'll be buying these stocks. I want my okay, if the conditions are like this, maybe I'll gradually increase my exposure. Then I want to sell things. But if you go in there willy nilly, if you have a bad plan, or if you go in there with no plan and you start just buying stuff and to see what sticks and don't know why, and you buy and sell things at random times, that's not going to work. I mean, you're almost going to be compelled to be controlled by your emotions, which is never a good thing as a Jedi or as an investor.
Hmm.
And that is just going to be a road to ruin. You might get lucky, and have things work out for you because you buy something that's hot and it goes up. But you that will not work out in the long run. And definitely in a market like this, having no plan is a terrible idea.
Hmm. And I mean, certainly there's an element there too. I mean, kind of what you were saying, where it was the apologies, happening for the last movie and trying to fix things. And I feel like sometimes that can happen with revenge trading, where I really messed up this last trade, and so I'm gonna try and really fix it with this next trade, and kind of putting all your hopes and fears into uh, you know getting back what was taken from you. Does that ever work?
I mean, yeah, it can work, but it's not a good strategy for long term. I mean, yeah, it's like there's nothing, it's okay to like, okay, this didn't work. I'm going to buy it back when it comes in, but you have to establish that trade, or you have to say if there's a trade that's out there, but don't, you got to keep your check in. It's like I think that if you want to play revenge trade, it's like, well, if maybe buy an extra share next time or buy something like that. Just control it a little bit. So that's your anger, but you need to control it. you know, that's just, if you let your emotions rule you, you're going to get things go bad. It goes bad in the Star Wars movies, and it goes really bad in the stock market.
Yeah,
Mhm.
I mean, I think you bring up a really good point there. I mean, and that's something that we talk about all the time on the podcast, or it's just even throughout IBD, is that you have to be emotionless, right? And that's what all these rules are here for, to help remove those emotions. So ideally, you don't get angry, and you don't have those revenge trades, and you're just kind of just like those Jedi's in the movie. They're pretty emotionless. Yeah, they even took Samuel L. Jackson and made him really emotionless in those movies. And but that's really how investing should be boring, and that's how you really need to approach it, because there's going to be plenty of ups and downs to experience, and you're not going to survive if you don't manage your emotions.
Yeah,
Right.
that's always, yeah, that's just a basic tenet. And like, and you don't have to make all the money now. It's like, there's this, like,
Yeah.
talked about, this is my last chance to make money. This is our last hope. It's like, no, there's always a new hope. There's always another market rally. If this rally isn't working for you, just take it easy, back out entirely, or just keep a real minimal thing, and then, maybe get your mindset back better and get into a better market. You don't have to be fully invested now. You can be, that there's a time and place. It's like, when they're on the first Death Star, and Obi-Wan, it's like, you can't win, but there will be other opportunities or something. There'll be other chances, and it's like, and so it's like, and that's, and he's the Jedi master saying that. It's a little bit when David Ryan or Mark Minervini or Bill O'Neill would be saying, hey, you don't need to be that aggressive right now. And these are people
Right.
who have
Right.
enormous skill, enormous track records. They would deservedly have enormous egos, but it's like they keep those emotions in check, and they realize there's a time to play and there's a time to say, let's step to the side.
Mhm. Well, and I think, another thing that is in common with some of those stock Jedi masters is the humbleness. Kind of recognizing that as humans we're fallible, and there's a lot of things that we can do wrong, and that we don't have the answers. And so again, it kind of falls back to the rules to uh, save yourself from yourself sometimes.
Yeah, it's the rules are there to protect you. The rules aren't there to make it so you always win. It's
Mhm.
just like, well, why did I have to put on my seatbelt? That's not fair. Why did I, so it's just like, they're there for reasons. It's
Mhm.
like, why do they have rails on the stairs? Why can't I just go up and down all these stairs? And it's like, I can go up and down these stairs without problems. I mean, there's just, again, it's just like, you're thinking, the rules are there to protect you. The rules are there when things go wrong.
Mhm.
It's not that you can't just think that everything is always going to go right. If you go in a mindset that everything's going to be perfect, I'm always going to make the right spot decision. I mean, that's just crazy. No, nobody can make the right spot decision, and that, yeah. So rules are really crucial.
Mhm.
Well, and then also just having those rules, especially during a time like now. Now, who knows? Maybe the market goes down. Maybe we sell off a little bit to the 200. But or maybe we go into a correction, but and things look bad again. But when you get that fall through, you have to look for something to buy, no matter how frustrated you are. How many times you want to give up and say, oh, you know what, this fall through day, this new attempted rally is not going to work, right? You can't assume that. You got to just kind of try again, pick yourself up, try again, play small, because eventually one of these times it's going to slowly start to work, and that's when the market just will slowly pull you in.
And that's one reason to be light now, so you don't get
Yeah.
emotionally battered, so you don't preserve your emotional and financial capital. So when things do turn around, you're ready to go. You're fresh again. Something to say, like, if the market does turn south, you've got to have an exit strategy. I'm talking about taking the plan, the exit strategy. I think one thing in an empire is that when they realize the empire probably knows we're here, like when they're on Hoth, and there's like the immediate thing the rebel commander
There was
says
this
is,
probe, and it probably got a
Yeah.
message out.
probably
Yeah.
got the message. We don't know, but yeah, it's not looking great. We better start the evacuation. It's not like, hey, why don't we stay here and just wait? And then, okay, they get going on that, and they do put up a fight, but then clearly they're losing. That's it. They clear out. Because if
Yeah.
the rebels had just said, you know what, let's just stay on this ice planet and see how we do. It's like, well, that would have been the end of the series. That
Mhm.
would have, I mean, that
And they
was
had
what it was
that
going.
and they had that big plasma cannon too, right?
Yeah.
So they knew that those ships were there. So they had the plasma cannon to allow the escape ships to get away. And they, they fought a little bit, but they also knew when to run away.
Yeah, and so that's just some part. There's nothing wrong with stepping back, and it's like not running away in panic, but trying to step away. And if you could do so in
I
steps,
think
like
there
I'm
was
going to
panic. I
sell,
think there was some panic there.
that's just a good way to to do it. So try to do it without emotion too. Again, that's hard. It's hard, but you don't want to get to a situation where you're forced to sell or you're panicking, and so you want to try to do it in a gradual situation. There, again, it's no fun to sell losers. It's no fun to sell a stock that's given up most of its gains, but have to follow those rules. And if that's what's happening, either you're out of sync with the market or the market just isn't really good. And it's not too hard to be both of those things right now.
Yeah, right. But I think that also kind of speaks to the whole idea of attachment. I mean, there's some people that get so attached to a certain stock or to their own opinion. And one of the things that I admired most about Bill O'Neill was that he could change. He had so much flexibility where he could really be so excited about a stock but he really didn't have a emotional attachment to it. If the chart started looking funny to him and it started looking bad, um, he was out, and I could see him be like I remember one of the last ones that I saw him so heavy on was Corning in 2000, and he was so heavy on that. But then when it started not working, within like 4 days, he was out. And so again, just as they say, like the Jedi should not have attachments, to kind of keep their emotions in check. I feel like sometimes you have to make sure that you're not getting attached to your own theories and you're not ignoring the data that's right out there in front of you. Um, that is saying, hey, something else is happening, and that happens on the flip side too. I can't tell you what I would have done if I didn't have charts to rely on after the
Right.
COVID crash, because
Yep.
there's no way that felt like, oh, you know what? I mean, at the time, yes, you can see all the reasons with the influx of what the Fed was doing and stimulus and everything like that. And it makes sense that we rallied so much. But at the time, I didn't feel like investing. You know,
Yeah,
it was really
exactly.
the chart that kind of helped guide me in that way, rather than, kind of letting my feelings deceive me.
Yeah,
Yeah, and
and
that
go back actually quickly to the Corning. Sorry, Ed. Just for one thing, I'm sure Bill might even mention to you when all of a sudden the stock didn't. He saw it on the chart, but didn't feel right. You
Hmm.
sometimes hear people who've been doing this for a long time. It just there. It's like it kind of looks okay still, but something's off, right? It's not acting like it's being accumulated. It's not acting as it should. It's not feeling right, and that can give you even a little bit more of a heads up that maybe I shouldn't push it here. I'll give it a little bit of a chance. I'll have a little bit of a position, but I'm not going to be as aggressive as I normally would.
Hmm. And then maybe we could also talk about kind of the cockiness too. I mean, there's the famous part where Han Solo, tells Luke Skywalker after he's like, I got one. Hey, don't get cocky, kid. Is there an element of that where you have to again have that kind of humbleness and even if you get a leader, how do you keep yourself from kind of getting too full of yourself and losing your losing your strategy because you had one winner.
I mean, look, that's always an issue because it's like Chris Gessel, our chief content officer, used to say like, "Oh, that stock reflects my worth as a person." He's just joking around, but it's just like it's hard not to feel, "Oh, I'm so smart, I'm so great, look at me, I'm a genius." But and I know that like if a lot of new investors, especially if you kind of like if you're a new investor in 2020, it says like, "Woohoo, this is easy, I'm the greatest." It's like so you absolutely have to you know, take that in check as well. I mean, the reason why is that, you know, having, being so full of yourself is not why you're successful. It's because if you're looking at these starts and you're buying the right stocks at the right time, and then, trying to manage it properly, and all this is sort of dispassionately as much as possible, that's how you make gains in the stock market, not being cocky. And there's one reason why in general, all these studies say that men are not as good at investors as women because
Right.
men get their egos much more attached. Whereas like women is like, well, I want to make some money. I mean, it's like they want to make some money. They may have just, various goals, but it's not the same necessarily of ego. Just where men, it's just like, oh, I have to prove the market wrong. It's like the market doesn't care about you. The market will squash you, and it's not even noticing. And it's just like doesn't So you just have to recognize that you're trying to score wins here, and in these temporary battles, writing trends, but you are not the master of your fate in that regard, where you cannot impose your will on everything, and you have to just realize how small you are, no matter how successful you are in the moment.
Mhm.
So Ed, can a small amount of rebels turn this around? We have just a handful of stocks right now that haven't slipped through the fingers. And it's kind of the oldie and goodies, the large cap tech. Could they hang around long enough to turn this market around?
Yeah, I think was seeing something, and maybe Ed, you shared this, that it was like 7 or 8 stocks that was responsible for like 80% of the the performance this year or something like that.
It's certainly been enormous, and then
Yeah.
especially, yeah, so like they have the S&P 500's gain, and like no, by themselves they need more friends. They need more to come in. I think there's been an attitude. It's like if you're feeling happy, it's great if you have those stocks, but you have to remember those stocks, and there's some other names, some biotechs, those names that have done really well. But the end of Last Jedi, 99% of the rebellion's dead, and the entire rebellion can pack into the Millennium Falcon, and they're all singing "Shiny Apple, Happy People." Basically, it's like, no, that's not that. You need market breadth here. I mean, that's just not gonna work. So, you need to see more breadth. I mean, that's one of the things. This is deceiving. It looks like we're not that far from highs, and maybe we won't be. But again, the advanced decline line is terrible. The equal weight ETFs just are not showing that strength, and it's just suggestive of. I know we all like to think of it, that one hero like in the Matrix, or somebody who can tear down everything. It's like, guess what? That's not really what happens.
Mhm.
So that's when that improves, and it wouldn't take much. Again, it got a couple of good days, and the indexes and these equal weights are going to power through some key resistance. There's a lot of stocks out there near buy points, but again, it really wouldn't take much for us to break down, and there would be left of nothing. I mean, what happens if Nvidia and Apple and Microsoft start selling off? And it's like, what are we going to rely on a handful of home builders that are extended to lead the market? It's just like, I don't think so. I mean, it's just so that's sort of dangerous, and it also just makes it hard. I think it gives people a false sense of security. Oh, everything's fine out there. I mean, you know, it's not that hard to make money. It's like, well, if most stocks are falling, it is hard to make money.
Mhm.
I mean, and if most stocks go up for a couple of days and then reverse lower, it's really hard to make money. So that's the kind of environment it has been over the last few weeks, even though we might just be a few days away from something getting better.
Mhm. And I think one of the problems is that you just some people would say, well, if only 7 stocks are working, why not just own those 7 stocks and that's it? And I mean, yeah, that's easy to say, but kind of harder to do sometimes. Especially, as we've noted, there's been so many stocks that have looked fine, they've looked good, they're making progress, and then the rug gets kind of ripped out from under them, and it's when they come down so fast. So that does make it a lot harder. So to kind of just wrap up this segment in a little bow, what do you think? What do you think is kind of the biggest takeaway here of how we can be more Jedi-like?
Uh, you know, I, I I think this is definitely there's a time to just sort of, part of the emotions, and realizing that, if you can control your emotions, and part of it is fashion, is to look at the is that by doing so, you would look at the market and realize it's not a great environment to be aggressive. So right there, that's going to help you. And then just trying to have rules that you follow as calmly as possible, and keep on training. Guess what?
Hmm.
I know that it's nice to have instant satisfaction. I mean, like, oh, I'm the greatest, I'm a hero, but it's like, no, it's like you're supposed to train for a long time. Becoming a Jedi is not just picking up a lightsaber and waving it around. Becoming an investor is something that you have to take time and constantly try to work at and improve and stay humble. So I think staying humble, trying to stay calm, recognizing that recognizing who you are, recognizing the market you're in, These are all the kind of things that Jedi investing can do to help you, succeed.
Yeah, and for as good as Bill was, again, and I got to watch him for 15 years as he was trading. Even at the end before he retired, he was still working on things and trying to get better. And okay, what other data can I use? Let's do a study on this. Is there some way that we can improve things? And he was constantly doing that post analysis. Okay, this this is what I did. What could I have done to get better? Even if it was a successful trade, could I have done it better? So, well, thanks for that, Ed. And when we come back, we're going to look at some of the stocks that Ed has on his radar right now and what they can mean for the market. So stay tuned. We'll be right back.
The Direction Hydrogen ETF offers exposure to the top 30 pure play hydrogen economy companies by largest market capitalization, leading the way towards net zero emissions by providing more accessible, efficient, sustainable solutions across 5 hydrogen-related subthemes. With clean hydrogen-based energy expected to grow 5 times in the next 30 years, companies building hydrogen-related businesses to generate power, heating, transportation, and more will likely thrive.
Welcome back to the Investing with IBD podcast. It's another one of our May 4th episodes, so a special little Star Wars tribute on May the 4th be with you. Let's go ahead and get into some stocks here, Ed. Ed Carson is our special guest here. He's the IBD news editor, and of course, we always have Arusha Paris with us, who joins us from O'Neill Global Advisors. He's a portfolio manager over there. But ACLS was a stock that you were talking about, and again, the chip equipment is so important. And I mean, we've had the chips looking strong, whether it was the fabless, the equipment, the manufacturers, they all were coming up. Their industry groups were coming up the ranks, but then we started seeing a little bit more cracks in a few of them. What's your take on ACLS now, Axcelis?
Yeah, I mean, it's understandable that it's taking a break. It's no fun, but it's like you have to recognize that it's trying to bounce back. It had run up like 175% from its lows like late last year to the March high. So that's a huge run. And there was, certainly you could have almost doubled your money or gotten like a 75% gain from earlier this year. But it's come down with a lot of names. I mean, that's the thing. Aside from Nvidia, most of the chip leaders that were really moving things, they started breaking down. This one's putting up a fight. Okay, so we'll see how it goes here. It's below the 50-day line. At the end of this week, it could have a new base. Arguably, if it got above the 50-day line and decisively, it could be like an early entry. So it doesn't have a base yet, but it could. So it's reporting earnings Wednesday night. It beat Fuse, but its guidance was mixed. So we'll see how that goes. So we'll see how that goes, during Thursday and beyond. But I think this is important, not necessarily just this one, but there's a bunch of them. But this is one of the ones that's in best shape. That can it find support? Can the chip sector bounce back? And this is just one I'm watching for to see that, because if chips can't really lead, it's really tough for tech stocks to lead.
Mm-hmm.
Yeah, for ACLS, I mean, I think this is a really good example of remember when the market really struggling. This might have been the first breakout to really emerge, and I mean, I had that really strong, sharp right hand side of the cup held tight and was off and running. Really on that week when we had the falter day on January 6th, and then just took off theirs. And shockingly, like unlike a lot of the other ones, other semiconductors that you mentioned, Ed, this one is kind of hanging in there, right? Which I think is kind of impressive.
Yeah, so we'll just have to see how it goes. If it can, yeah, I think you want to watch for it and wait for it, because a lot of stocks might come up. I mean, this might come up to resistance and then head lower. Obviously, it depends on the market, but I want to see if this one can hold up.
Mhm. So, I mean, looking at SMH just as kind of an overall picture of the chips, of course, SMH is the VanEck Semiconductor ETF. This one has been kind of drifting lower, and it kind of shows a little bit of this fractured nature. I mean, there's a lot of chips out there, of course, and some are winners, some are losers, but I guess at what point do you, how many chips do you need to be strong and to be holding up? Because again, it seemed like there were a lot more of them, and then we started seeing those big breakdowns. I mean, Impinj was holding up. It was above its 50-day moving average line until it wasn't, and when it wasn't, it did so spectacularly.
Oh.
So I guess is there kind of a percentage of, oh, I need this many working, or this number working, not just Nvidia, but 10 working, or whatever, to kind of give you a sense that things are going to be okay.
I haven't really thought about it. I mean, you want a good number, and I think you'd also not just have a good number, but have some heft behind it. Maybe not just Nvidia, but at least some other names at least doing well, because it's hard to. Okay, some of the chip equipment names have come up. Not, I mean, some of the major ones they've come up, but they aren't really doing a whole lot either. I mean, some of them are coming up, so you can't really buy them, and that's okay if they're not the leaders, but you'd still like them to do okay. And
Mhm.
so, yeah, it just felt a little bit, even at the top, it felt a little bit like it's NVIDIA and like 7 or 8 chip makers that are really hot. But even then, it didn't really feel that broad-based, all in all. So, even at the peak, it was a little bit suspect.
Mhm. And then there was also this component too that I think is worth mentioning, that it seemed like for a while there that the chip was almost a subsidiary of the EV play. That
Yes.
the chips
You're
that
right.
were
Right.
working were EV specific, and so it was
Yes.
almost like, is this a chip play or is this an EV play? So do you think that's changed now?
Yeah, well, I do think so, and partly because EVs aren't looking so good. I mean, Tesla's come
Right.
off and nobody else is doing well, and I think there's just generally sounding that maybe EVs are not doing as well as people had hoped, whatever. I mean, but that play is not working right now. So, yeah, I think that's a good point. It was, a lot of those names that were working were EV related, and like, AEHR, or there is one on semiconductor. That one might bounce back, but it always seems like that's one that whenever it's a time to buy it, that's when it's a time to sell it, actually.
Yes.
You know,
Right.
or, because that one has that move where it peaks out. Look at that time. It's peaked out 3 times, and each
Yeah.
time it's come down hard. How are you? I mean, if you get an early entry, maybe you're okay. You escape. Okay. But if you actually try to buy something close to the highs, there was a chance for like a 5% gain and then followed by a 30% drop, 3 times. And
Yeah.
it has risen over that time. I mean, you're really betting against the odds that that's when you do that.
Mhm.
Yeah,
And
I
the,
mean, this
the
is really the character of a stock here with the on semiconductor. I think this stock has shaken me out 2 or 3 times to the point where I've given up on it. I don't even
Mhm.
want to try it, which probably will mean that it will work really well the next time it breaks out.
Now that you've given
But
up.
yes,
It's right around an entry point right now, in my
I
view. I mean,
know, I
that's the
know.
thing.
Yeah,
It's like, but it's also risen so much in the last few days. It's like, really, do you want to buy it after like a
right.
20% run? I mean,
Yeah,
that just, yeah.
yeah.
But
Well, and
I
then
feel like
also, I mean,
that
it has
look.
these.
Oh, go ahead, Arusha.
Oh, but no, I just very quickly the deceleration too of
Yeah.
Mhm.
earnings and sales now, as opposed to before when it had all this time to work. It had incredible fundamentals at that point.
Yeah. Mhm.
Excellent
But I
point.
do feel like there's a lot of those charts, again, looking at that weekly chart of on semiconductor, I feel like this is a recurring pattern that we're seeing in a lot of stocks, where they have the same look, where they, as soon as they get up to those highs and it looks like it's ready to break out, that's when they fall apart. And again, you can look at it like, okay, over the year it's made progress, and you're like, oh, if I just held on. But how do you hold on through 25% corrections when you have no cushion? And yeah, so it's just, it's, if you just looked at the price at one point and what the price was at a different point, it would seem like, oh, sure, that's easy. But it's all the in between that's happening that is making a lot of these stocks so much more difficult. Um, Speaking of kind of a difficult play, FND, Floor and Decor, this is one of those things where I think a lot of people were thinking that, okay, the whole home improvement thing is over. People did that during COVID, and now they don't care anymore. Home buying has got to slow down because the rates have increased so much, and a lot of these stocks were kind of given up for dead. But it seems like the home builders and home related has really kind of been one of the areas of strength, not necessarily soaring all that much, but holding up well. And you see a lot of the relative strength line new highs and blue dots in this area. So Floor and Decor is in the retail space. What is it that you find attractive about this one?
Well, attractive, and It's obviously right around a buy point. So it's acting well. All those things you said. Look, the fundamentals aren't going to be great. If this thing starts struggling, will it be easy to say reasons why? Because the fundamentals have looked great, but we're supposed to see a drop this year. But so have the home builders. I mean, the home builders, home builders are supposed to have lousy numbers, and you just have to recognize that it's not great. But Floor and Decor, this is definitely a situation. Also, you don't want to be buying it ahead of earnings unless you're doing an options play. I mean, like if you bought today, it's reversed lower, and you have no idea is it going to fall 10% tomorrow night? On Thursday night, I don't know. Maybe it goes up 15%. Or maybe it goes up 10% and then releases the gain. I think you need to wait for that. But I'm like to look. A lot of the home builders are extended. This is one that might do well. This would be a sign of housing. It'd be a sign of consumer spending. Are they willing to spend on big ticket items? This is one. It'd be interesting to see how this one does. I like how it's traded pretty tightly, but it's like there's plenty of stocks that traded tightly and then crashed. So I think I like this one, but I also want to be waiting for the actual report and seeing if it provides an opportunity. And it may not, I recognize that.
Yeah, it's been slowly tightening up. The 100 price point is really key resistance there. So if it can power through on heavy volume after earnings, maybe it has a chance. I mean, there have been a number of names within these groups. I mean, I think today, BLDR, right, Builders First Source,
Yeah.
they reported earnings and it broke out powerfully out of an ascending base, and that has been showing tremendous relative strength. Um, so yeah, it'll be really interesting to see what a Floor and Decor says, but it's pretty impressive that it's been at least been able to hold up pretty well over the last number of months here when the market's been so volatile.
So there's a lot of kind of the demographic questions of, there's this whole generation that's clamoring to get to into houses, but they
Or at least
just
their parents clamoring for them to get into
oh,
the
yeah,
house.
right. For them to get out of their houses, I don't care where you go, just don't stay here. Um, so certainly that's making a case for why new construction is needed. But what is kind of the story you think for something like I mean, I would think this would be more for the existing homes, right? When you're wanting to change the floors in an existing home because it needs updates and things like that. Um, does this go hand in hand with new construction, or am I reading too much into that? Is that
It's like it's probably more with existing homes. I mean, I don't know to what extent Floor and Decor works with construction firms. But I feel
Mhm.
like Floor and Decor is more of a home improvement type situation. And some of those
Right?
home improvement chains have not done as well. So there is that aspect. We've seen that people are willing to spend money on little luxuries like Elf Beauty and other things. I mean, not that Elf Beauty is bargain, so it's not even really a luxury, but
Yeah.
spending on things that are okay, relatively modest, but not necessarily for the huge big ticket items. Those aren't thriving as well. So Floor and Decor is obviously more in that big ticket area. So is that another sign? Is the home improvement starting to wind down or not? So
Mhm.
this will be an important report.
Yeah. Another area, speaking of kind of the luxury thing, is travel back. We keep on talking about how whether it's the airlines or Airbnb, the hotels like Marriott and Hyatt, they've had a number of cases in which they've looked like they were setting up, and then kind of like that on semiconductor, they just don't go anywhere. But let's take a look at Booking. This is Booking.com, formerly known as Priceline. BKNG is the ticker symbol here. What do you think about Booking here and the the aspect of travel? Is it truly back?
It seems to be back. We keep on saying that it's like, and Booking seems to be the clear leader. I mean, I know that there's a lot of people just wanted to look at Airbnb all day long, but that really isn't doing. That's actually pretty much a laggard in the whole thing.
Hmm.
Airlines seem to be a mess and have big moves. Hotels are just setting up reasonably well, but those have big ups and downs. But Booking has been pretty steady. I mean, it's been hard to get into. I mean, it's like they had this sort of herky jerky stuff going on, but on a weekly basis, it's trended higher. That RS line is at multi-year highs. The
Hmm.
growth is pretty strong. I mean, when you talk about the hottest sectors are sectors where the earnings are going down. This one is not, and had pretty good earnings the prior year. So it's not earnings over easy stuff. So I think this is, if travel is back, this is one that should be, you want to be looking for the leader, looking one with a little bit of consistency. Uh, I wish earnings had come a little earlier, like you could buy it off the 50-day line, because it sort of has sort of an ascending base feel, or the sort of up and down, which is because every time the market keeps on trying to go up, but it keeps on riding the 21-day, riding the 50-day line. And but so that's what I'm looking for this one. If travel's going to do well, this one should do well because it's been the leader. It has some strong growth in there, but it's this has definitely been a challenging sector because every time you think it's going to go off, plans have to be canceled.
Mhm.
Yeah, so I mean, it's in many ways, I think it's kind of consistent with the rest of the market, where in this narrow rally, the money's going towards kind of the familiar names, the larger cap tech names. So it's like, okay, if we want some exposure to travel and leisure, yeah, let's just go towards the oldie but goodie Booking Holdings, right? And that it's just slowly crawling up here, and that relative strength line hitting new highs is pretty impressive here. So let's see what they say on earnings tomorrow, which always makes it fun.
Yeah. So, and what about? I mean, this is something that we haven't talked about, but since Arusha has it open, on the right hand panel, um, there is some ownership here. Janice Henderson in there, Franklin Growth Fund. Some members of the IBD Mutual Fund Index. Is that something that we've often harped on how important the institutional side of things is. We haven't really talked about that this time around, but what's your sense when we're talking about these big mega caps leading, and certainly it's hard to say, like with a Microsoft, which so many institutions have to own just because they can't lag the indexes. They have to be almost closet indexers sometimes. What's your take on this kind of institutional side of things?
Well, I mean, I think, having these quality institutional leadership is so important, especially with growth stocks. You want to get, is it real here? Now, and that doesn't mean that they're going to keep going up. I mean, plenty of stocks are like, that's not a guarantee, but it shows that they've probably done some homework. And that they feel comfortable making a long-term bet. But when you refer to the Microsoft side of things, yeah, it does feel like there's a piling on into the narrow leadership. That makes it extra risky because it sort of feels like, everybody's looking at a handful of stocks that will run out of steam at some point. You just can't go. I mean, not to talk about rebels, but it's sort of like when you get a little trickle of water when somebody turns on the spigot and runs down a hill and starts collecting more dust, and it just starts slowing down. It can't quite go any further, if you know what I mean. It just sort of like it's going to lose momentum. And I
Yeah.
just, I so I,
Well, and when
you
everybody
know,
has it, who's left to who's
who's
left to
left to
buy?
buy it? It's just like how much can some of these slower growth giant mega caps go up? No, price, booking is not like that. So I think that,
Mhm.
and I'm not saying because it's actually got an AD C plus AD rating. It doesn't necessarily have the most amazing accumulation, but certainly with those mega caps, their growth rates for the most part are not tremendous. And there's various reasons, so that just raises levels. So, how much can those valuations go up when everything else is sinking?
Right.
Again, that's propping up the market. And so you can ride those trends, and some of them like Meta have strong growth, and Nvidia should have strong growth in 2024. But that's just something to, in general, you just have to watch out for some of these names. Yeah, Nvidia is not going to be doing much this year, in fiscal 2024. But it is nice to see a stock like Booking actually have earnings this year.
Yeah.
And I don't know if they'll be presented a buying opportunity. That's the one thing. If it pops out, how far above? It doesn't really have a base. It doesn't really
Right.
have a 10-week line. That makes sense. Look, so here's a nice stock that looks right. It's the leader in a sector, but where do you buy it? Even this one really hasn't provided many good opportunities. Where were you entering that name? I mean,
Mhm.
okay, maybe off the 50-day line, but that would have been tough up and down. So
Mhm.
uh, and and now earnings are coming up.
Yeah. I guess that's kind of the conclusion here. It's tough out there, right? It's not easy. The stocks that are giving you the setups aren't going anywhere. The stocks that are going places aren't giving you setups, and it's just a tough environment right now. But we appreciate your thoughts and helping us all get through it, and also sharing your Star Wars knowledge and hatred at sometimes. But again, just don't
Sometimes.
don't let the anger feed on you, Ed. That's But we appreciate you being here, Ed. Thanks a lot.
Thank you.
Thank you so much for joining us this week. And next week, we're going to have Kenny Polcari back on the show. Kenny Polcari, of course, was one of our floor traders for O'Neill. And I mean, just a great host of knowledge that this guy has. And the passion is something that you just can't beat. So we're going to be excited to have Kenny Polcari back on the show next week. Thanks for watching. We'll see you next time.